Well, Christmas is still in the air, and just before that goes away, then we have the New Year holiday also. But the realities, the macroeconomic realities, are still staring everyone's stock in the face. Let's see another side of that now. We have joining us for the commodity segment, the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewane, to explore some of those issues. Good morning, Mr. Rewane. Well, compliments of the season. I would have loved to ask you how you spent your Christmas, but I mean, I guess that's not to be discussed here, but I'm sure you took some time to rest.
Absolutely, yes.
All right, so yesterday we had this great news, sounds great, well, until we see it happen, that Nigeria will be supplying LNG to South Africa. Help us understand it. I think it's a private company, and, you know, the bigger picture of this.
LNG constitutes about almost 14% of Nigeria's export earnings. So you have LNG coming out of the Nigerian LNG plant, and then LNG exported directly from Nigerian LNG. Now you have another company buying LNG from Nigeria and shipping it to South Africa. It doesn't improve the overall export earnings of Nigeria because it's a limit, but it also diversifies the market and also brings the private sector into the process. So it's, to some extent, it is improved news. No, I would say improved performance of the economy in the sense that the private sector is cooperating with the public sector to actually enhance export earnings for Nigeria at a time when the Naira is under pressure.
But isn't this going to put pressure on domestic supply? I know there was a time, I think they had to channel almost all, I think, of all the NLG product for domestic consumption. So isn't this competition for domestic consumption?
No, not really. We have enough gas for Nigeria's domestic needs. So we actually export. What is being exported is liquefied natural gas. What is being used domestically is called liquefied petroleum gas, which is for cooking. Then we are using compressed natural gas to fuel our cars as well. So I don't think there's a problem. It's not either or. It's just one complementing the other.
Can we expect this to add to the FX supply in the country?
Well, not really, because the LNG was going to be sold to somebody else now, but it's being sold through a Nigerian company to go to South Africa. So what it does actually is to diversify your markets. Before now, most of the LNG was going directly to Europe. Now you're having it, part of it going to the African continent, which allows you to insulate yourself from the vagaries and volatility of the international markets in Europe, especially now because of the Ukraine war. We've seen a lot of turbulence in that market, and the winter is coming. So naturally, I think it's excellent news for Nigerian diversification of its markets, but not necessarily in terms of increasing the export earnings.
All right. And then we see CBN has had to be clarifying some things. The banks are in good shape. Your money is safe. I just wonder what's at the root of it, because they say there's no smoke without fire. And sometimes when you hear some of these things, something must have started it off.
So in stock markets, we said you buy on the rumor, sell on the news. The problem with social media is that there's a lot of smoke without fire, right? So and a lot of what we call smoke and mirrors. The reality is that the Central Bank of Nigeria is there to assure investors that your money is safe. And if you look at what happened in Silicon Valley Bank in the United States and what happened to Credit Suisse and UBS in Switzerland, regulators and policymakers are, being very proactive. Rather than have rumors create a run of its own, what we call a self-fulfilling prophecy, they've actually come in at the right time to actually stall and prevent this thing from catching fire. So what have they said? They said the banking system is safe and sound, that they have enough resources to actually ensure that depositors' funds are not threatened. And more than anything else, there's proactivity or proactive thinking. And the central bank, I think the central bank governor said at the Institute of Bankers dinner that there'll be recapitalization of the banks, just in case any of the banks are threatened. the recapitalization exercise will make them get absorbed into a consolidated exercise. So I think that by and large, what the central bank said is what it's expected to say. What we are looking out for is to see how they can be much more proactive in terms of its regulatory stance and stress testing banks just in case there are macroeconomic risks that could actually undermine their capital adequacy. What I must point out now is something which is quite worth noting or noteworthy. The federal government and state governments shared an approximate amount of about 1.8 trillion naira yesterday. What I want viewers to understand is that before the reform policies that were announced in June, the federal and state governments shared an average last year of about 600 billion naira. The early part of this year, maybe about 700 billion naira. But since June this year, and the announcement of subsidy reduction and exchange rate convergence, the amount being shared by the government has increased by 200%. In other words, from 6 to 700 billion, it has gone all the way to 1.8 trillion naira. So the government is making money out of the reform. The individuals, there's been palliatives and some droplets here and there for the people. But also, so essentially, the government has benefited. The consumers are making some sacrifices because you're buying petrol at a higher price and you're buying foreign exchange at a higher price. Now, how to convert government funding into well-being and happiness of the people is a big challenge. So your minimum wage is 30,000. They give you, I think they've given 60,000 naira in addition, making it 90,000, right? But the government has much more naira in nominal terms to spend. And this has to be translated much further than palliatives. You need investments, you need increase in productivity, and you need to debottleneck the economy. This is where the real challenge is.
Yeah, we hope that the government will look that way in 2024 because, I mean, we've seen both the IMF and the World Bank applaud the President Bola Ahmed Tinubu's led administration for taking these steps. And just as you have noted now, we've seen FAC increase month on month, but we're looking for, where it spreads to humans, the citizens themselves, especially those who are down the ladder, the social ladder. So we do hope that it will be more of this will be focused on by the government in 2024.
Definitely. You see, the thing is that the amount of revenue going to the government has increased. And coincidentally, at the same time, the number of multidimensionally poor people in the country have increased. There have been a lot of promises to do this and do that. I think the Minister of Humanitarian Affairs has been talking about interventions. But the impact of these things are not being felt because there's a time lag between when you announce policies and when you feel the impact and when people begin to believe you. So the thing is that you have to fast track the impact. Because if you go down the slides that you have before you, you'll find that the prices of commodities, in particular rice, has gone up by 49% compared to last year. Turkeys have gone up by 22%. Turkeys are for the elite. And then tomatoes are up 9.1% year on year. So people are feeling the pinch of inflation. And the government is also making more money. So how do you convert increased government revenue into increased output and productivity and into the welfare and happiness of people? This is the challenge. Talk is cheap. You can make all the announcements you like. You can take all the photographs you want all over the world. But the reality is that it must translate into prosperity of some sort for the people to begin to feel the impact, or at least reduce the pain and the pain, because the misery index actually has increased. The number of Nigerians who are in misery have actually increased somewhat.
So, Mr. Rewane, thank God you're an economist. We've seen the government attempt to share this increase in revenue. At least I think that's what they try to do. When we hear cash transfer, we know they just started the 20,000 naira. We hear palliatives. We see Ms. Betta Edu, giving out things and all of that. But as we all know, we all see, the impact is either slim or non-existent. What do you think would be a more efficient way for the government to share this, especially the gains from subsidy removal, where we have seen their earnings up about 200%?
Well, you see, the reality is that these are nominal figures. It's just the naira that you are getting now is last year, with 700 naira, you could buy $1. Today, it's costing you 1,251 naira to buy a dollar. So in real terms, money is what money can buy. So what you need to do is to increase output and productivity. To increase output and productivity, you need domestic and international investment to increase. Domestic and international investment will only increase if people believe you, there's confidence. So to be honest with you, the government is saying all the right things. And they're saying the right things, they're taking the right pictures, they're making the right pronouncement. But what is being done and the impact of what is being done is not being felt yet. So there's a time lag. So you have to come across to people to say, look, there's a time lag. There's equal and the sharing of the burden. But the sharing of the burden has to be visible. You cannot, on one hand, buy vehicles for 160 billion and you're taking 1,200 people to a COP things. All those extravagant gestures are not consistent with the message of sacrifice and increase taxes and increase that. So one, you must get investors to be confident. Two, you must begin to act, like everybody is sharing the burden equally. And thirdly, you have to be credible. There's a trust deficit. So you can't blame it on the past. You have to take responsibility for what's happening and let the people know that the future looks better, even though slowly. So the question is that, will 2024 be better than 2023? You bet it will be. But people are getting impatient because people cannot take suffering for too long. That is the message that has to go out.
All right, Mr. Rewane, just before we let you go, we're out of time, but I really need to know this. The CBN has been talking about target inflation as its focus. What does that mean? How does that change things?
Okay, no, the inflation targeting, explicit inflation targeting is a framework. It's like, here is the plan to build a house. The house itself is being built, and then you compare it with the plan. The inflation targeting, explicit inflation targeting framework has been announced, but without the target. So you have to have the target, and you have to have the anchor to anchor the what they call the nominal anchor, which is actually the MPR, which is the interest rate, and that anchor has to pull other rates across. So without trying to bore the people, and because these are very abstract concepts when you talk about inflation targeting, the reality is that the test of inflation is, what is the price of rice? What is the price of onions? What is the price of tomatoes? What's the price of vegetable oil? If these prices are not moderating or begin to decline, even though seasonally driven, then people are not interested and will not be interested in all of these abstract concepts. Abstract concepts do not put food on the table, do not put rice in the pot, do not give you bread. Basically, you must drive down prices by increasing output. And you have to do that by, one, saying the right thing, but also doing the right things. That is the challenge that we face today.
Yeah, well, you hit the nail right there as usual, Mr. Rewane. Thank you so much for your time. Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewane.
Thank you for having me.